So let's talk about those 5 foundational accounts. If we call these our electronic cash envelopes. So those of you who know me know that I am obsessed with Dave Ramsey and the cash envelope system. Financial Peace University, we usually teach it about 3 times a year to our community. Being elite tax partners in the last year, we haven't taught it. We've been teaching some other things, but we will develop and bring out a new financial peace class because a lot of our clients are asking for it. And so electronic envelope systems is much like Dave Ramsey's cash envelope system. And so when you get paid, you go for Dave Ramsey's Financial Peace, you go to the ATM, you actually pull out cash and you fill up your envelopes, expenses that you could control. So groceries, fuel, like we can't really control our mortgage or our rent, things like that, but we can control groceries, fuel, entertainment, meals, eating out, clothing that we're buying, things like that. So you would use your cash envelope systems for these type of expenses. That's how Profit First is as well. So we're going to talk about the 5 foundational accounts. These are the 5 accounts if you're starting Profit First that you start with. And so you have your income account. That's kind of like our big plate. We'll talk about that in a little bit. Our income account is where all the income comes in. And then at certain designated days per month, we divvy out from the income account into our 4 smaller accounts. And those are profit, owner's pay, that's your W-2 if you're an owner, taxes, that's where your estimated taxes are going to be coming out of, and then your operating expenses, that's everything else. So let's talk about your serving tray. This is actually if you're only using one bank account, usually we recommend that that's the account that you're going to turn into your serving tray. The reason why is usually you have so much credit card payments coming in and everything's hooked up to that one account. And so we want to have all the income coming out of this account. And then we're only kind of like Thanksgiving, right? When you're a host for Thanksgiving, the host typically serves Thanksgiving from a huge, beautiful plate, right? It's not just a free-for-all. Everyone jumps in and takes something for themselves. No, it's beautiful, and the host apportions to each person. So when there's a single checking account, everyone gets to eat from it and come on in. I'm saying that it should be for display purposes only. Money comes into this account, but you don't pay any bills from this account. But we use the smaller accounts that we apportion the food to, and then bills get paid out of the smaller plates. So our first smaller plate that we start with is our profit account. And yes, I am saying to pay yourself profit first. Business owners, you have taken a risk, something that's extraordinary. 97% of the population has not taken this risk. This is something that you have courage, you're courageous, you've gone out there, your blood, sweat, and tears, and you should be rewarded for that. It breaks my heart when I see business owners that are just slaves to their businesses and they're living below the medium poverty line. And so this is the Profit First account. Pay yourself first. Our next account is going to be our tax account. So we're no longer going to wait till the end of the year, cross your fingers and pray that Kelly and Nicole can wave their magic wand and your taxes go away, right? We're actually going to save every single month, actually twice a month, into this tax account. And then once a quarter, when your estimated taxes are due, you're going to use funds from this tax account to pay your estimated payments. So this is common sense. We want to save for taxes, right? As business owners, especially if we were W-2 first and then we became an entrepreneur, a lot of times we're in this kind of constant catch-up mode to try and pay for your taxes. When you become a business owner, all of a sudden the taxes weren't withheld for us from our paychecks, and there's this large tax bill due, and then you're in constant catch-up mode with estimated payments that are due the same year your taxes are due. And very quickly, business owners that go out on their own and don't get that advice first when they set up are in constant catch-up mode. And then owner's pay, we do know the IRS is starting to heavily look at W-2 compensation for S Corp owners. It has to be fair and reasonable. No longer can you pay yourself $6,000 when your business is profitable, $200,000 to save on that self-employment, Social Security, and Medicare tax. Owner's pay is very, very important. And so besides enjoying the profits from your business, you should also be paid for your work that you're doing in and on your business. So you do have to pay yourself first. You are probably one of your best employees. So pay yourself first. And we'll talk at the end of this presentation about a new tool that Elite Tax Partner has to help figure out what that reasonable compensation is. Because the IRS, it's not black and white. It doesn't say if you're a contractor, you should be paid $75,000 a year. If you're an accountant, you should be paid $50,000 a year. There's nowhere that says that. There's actually a lot of things that go into reasonable compensation. And so we have purchased a tool that allows us to calculate this efficiently for our clients. Our other smaller plate is our operating account, and this is to pay all other expenses necessary to operate your business. This is the only account that you pay bills from. So profit, you're going to take quarterly distributions. We'll talk about that. Your tax account, you're going to transfer over your estimated payments, but your operating account is where all your utilities, your rents, your overhead, payroll, telephone, internet, all of that comes out of your operating account. So this is the account with the most activity. The other accounts will just have a couple of transfers a month. This one will have all your bills being paid out of.